Will Bitcoin make a new all-time high in today's session? Or will market makers engineer a mid-week reversal, attack fresh liquidity from late longs, only then catapulting price higher to liquidate fresh shorts, and inflict FOMO to perpetuate price higher in a parabolical ascent into price discovery? Let's discuss. If you are new to the channel, our daily updates are short format summaries of our market perspectives and trading strategies. We are a team of investment professionals leveraging our careers in traditional finance as traders, market makers, and portfolio managers for top-tier institutions, having transitioned to proprietary traders of digital assets. We have developed a methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs. Our approach translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms, with a focus on market structure, liquidity, volatility, and time-price volume relationships. Please note, our content is not investment advice, or is this an educational channel. It is intended for entertainment purposes only. If you suffer from analysis paralysis and prefer short-format market perspectives and rationale for our trade setups, stay tuned and enjoy. Bitcoin traded in a tight range below resistance overnight in the Asian session, after two failed attempts at a new all-time high in the New York morning and afternoon sessions. Resistance came from a combination of fresh speculative shorts, limit sell orders, and absorption of buy-side liquidity from liquidations of seasoned short positions. This process of consolidation and local corrective price action persisted into the London session, but fresh demand and accumulation has contained the range to a shallow retracement. Price action since the weekly open has become increasingly impulsive into midweek trading session, which increases probability of a shallow retracement to current corrective price action. Market structure is bullish locally, with no change of character and invalidation levels, not within close proximity. Order flow is also bullish, with real-time indications of absorption from a divergence in trajectory of price in the context of cumulative volumes of aggressive market short orders. Other indications of continuation exist from record futures open interest, positive perpetual futures funding, low exchange reserves, all cohorts of short and long-term investors in profit, and persistent net inflows into Bitcoin ETFs. The latter has been particularly supportive to valuations, with the net inflows 9 of the last 10 sessions, and yesterday being the largest of the month, just shy of 900 million. Sentiment indicators such as crypto greed and fear index unsurprisingly increased overnight, moving deeper into greed approaching extreme greed. Volatility markets, which are a reliable leading indicator of expectations, also reflect expectations of higher prices, with the 0.25 delta call/put skew, which reflects the implied volatility differential between out-of-the-money puts and calls, is positive for all options expiries. Looking forward, Friday we have key US economic data from non-farm payrolls, which has implications on the Fed's monetary policy reaction function. Quarterly earnings results are also fluid, having potential investment implications for correlated risk assets. The following week, we have the most significant event, possibly of the entire year, that being the US presidential elections. Also, potentially impactful, are imminent new flashpoints in the Israeli-Iran conflict. In terms of strategy, incorporating aforementioned qualitative and quantitative variables, our model translates to project a shallow retrace of the current impulse and resumption in the upward trajectory in price. Our directional bias remains to higher prices over the long term, with target of 81.5 thousand by January month end. Local levels to the downside, to which we identified as points of interest and high probability reaction levels, are 71.7 thousand and 70 thousand, the latter being both a key psychological level and high technical confluence zone. We will be monitoring time price volume metrics and indications of real-time absorption at these levels to evaluate increasing our long exposure. We have also hedged our downside risk via put options, given elevated left tail risks and heightened susceptibility to market makers' predatory behavior, not atypical near all-time highs with consensus long positioning and exuberant sentiment. As always, do your own research and analysis. Be safe, and good luck in trading.